Revenue and expenditure. State has many roles to perform for the welfare of its citizens. The three important roles are 1. External defense, 2. Maintenance of law and order, and 3. Providing the social goods and services. Some public goods and services are provided by the government to its citizens, and no single individual citizen can be owner or beneficiary of it. For example, national defense, police services. In the modern race, government plays a vital role in the society by providing facilities such as education, health, and infrastructure. To meet the expenditure, government requires huge amounts of money, so it has to search for sources of its income and raise money from the citizens. Such receipts from public are known as government revenue. Thus we can define 1. Government revenue or public revenue as the total amount of money received from its citizens to meet its expenditure. And 2. Government expenditure or public expenditure is the total amount of money spent on maintenance of law and order, protection and promotion of welfare. Types of revenue. Government must raise the revenue required to meet expenditure. There are various ways in which the government does this. 1. Taxation. A. Direct taxation on personal incomes, on corporate profits, on wealth by profits. Charging for services directly provided to the public, profits from state-owned enterprises, sales of state-owned assets, borrowing from domestic market and international sources, deficit financing, and money creation. Tax revenue. Tax may be defined as a compulsory contribution which is not related to the benefits received by the taxpayer. Tax revenues are used by government to finance the provision of public goods and services. Tax may be imposed on income, property, and on commodities. Revenue received from all these sources of taxes is known as tax revenue. Non-tax revenue. Non-tax revenue consists of revenue from public properties, if that government enterprises, fines, penalties, and borrowing. Government borrows money to cover its expenditure and to meet its obligations. Government borrowing is known as public debt. While money collected on tax is not returned, money borrowed will be returned with some interest. Government borrowings may be from the citizens or organizations within outside the country. Classification of taxes. Taxes are classified as 1. Direct taxes, 2. Indirect taxes. This classification is based on the principle that 1. On whom the tax is levied, and 2. Who pays the tax. Impact refers to the initial person on whom the tax is levied, and incidence refers to the final person who ultimately pays it. A. Direct tax. Direct tax is that type of tax where incidence and impact are on the same person, if that the tax burden will be on the same person on whom the tax was levied. Examples are taxes on income and taxes on property. Indirect tax. Indirect tax is that type of tax where impact is on one and incidence is on the other. The tax burden will be shifted to some other person. Examples of customs duties. Examples are customs duties, excise duties, sales tax, and entertainment tax. Types of taxes. Both the state and central levied taxes. Taxes levied by the central government are known as union taxes, and those levied by the state are known as state taxes. Union taxes. Under the direct taxes, union government imposes tax on income and taxes on property. Under indirect taxes, union government imposes taxes on goods imported and exported known as customs duties, and on goods produced and manufactured known as excise duties. State taxes. Under direct taxes, state government imposes taxes on income, property. Under indirect taxes, state government imposes taxes on sales of goods, taxes on sale of some special types of goods like liquor and drugs, taxes on entertainment such as cinema and circus, and taxes on movable property like motor vehicles, consumption of electricity, surcharge, and so on.